prepare the next panel. The next moderator is a very modest, reserved person, a little bit shy, so please give him a big welcome. His name is Vincent. He's famous for the Blockchain Innovation Conference in Amsterdam, and he tells me he bought his first Tesla with Bitcoin. Please put your hands together for Vincent Davis.
Thank you. Yes, ladies and gentlemen, 20 minutes to discuss funds, a way to basically get money inside the crypto economy and get it out. And we have fantastic guests. I myself am a trend watcher. I indeed bought 100 Bitcoins for €7 a piece. And at €700 in 2013, I sold them and bought a Tesla. That was the most stupidest thing I've ever done. It's a great car. It really sucks as an investment, but I wish I had hold those €100. Let me introduce the panel. Can I ask Vinny Gupta to come up first? Vinny, give him a big hand because he deserves it. He deserves it. Vinny, grab a microphone there. Grab a microphone there. He started, he was part of the original Ethereum crowd here and was all very much active in Switzerland. He's very activistic. He's really trying to make the world a better place. And you started a fund, right? You started a fund. And tell us, how did the fund do?
We stopped after about 9 months, midway through fundraising, because there was so much new money coming into the space, we could not see any reasonable way of doing value investing because the prices were going through the roof.
Yeah, and that was June last year.
That was June last year, right?
So we went up by 5. So you basically had everything ready. You had compliance. You had a fund. Everybody could invest with dollars and euros and everything.
Yeah, we were most of the way through that.
Yeah. And then you stopped before you got because you think these prices are going through the roof, and you thought that you couldn't invest smart enough to beat the market.
Bluntly, there was so much dumb money coming in, it was pushing the smart money back out.
Yeah.
Right. And then what we did was we started a company and moved to the buy side for capital. And it was relatively easy to capitalize it, and we're now doing all of this work on basically engineering blockchain smart contract enforceability.
Yeah. So okay. So this is an example of somebody who started a fund, who knows the business inside out. Mm-hmm. You went to the commercial. You wanted to go to the commercial side and help invest, and you said, "Hey, this is not the time to do a fund. I'm going to do something different." I mean, then instead of doing the fund, what did you do? You say enforcement. What was that?
Well, so smart contracts, as they currently stand, are not recognized by courts as contracts. Yeah. But it turns out that if you do the correct things, you can make them recognized by contracts, which means you can make it enforceable. If somebody, if you have a smart contract with somebody and they fail to deliver goods and services, you can actually go and get a court order and you can take their stuff.
Yeah, but you need a smart oracle or something like that, a smart interpreter of the smart contract by human beings.
Well, yes, you need. It works under the binding arbitration legislation. So, 1958 New York Convention on Foreign Arbitral Awards makes arbitrator rulings have the same force of law in 157 countries. Yeah. So what you need is private courts with arbitrators to manage the smart contract enforceability, and we're building those courts.
And that's what you're building now, and that's really an important part of a fund if we come to smart contracts and enforceability. If you could sit under your name, then we can get it. Can I get the second guest up, and that is Ruslan Gavrilyuk. Something like that. Grab a microphone too. And he is really interesting. He did an ICO, he did a fund, and Ruslan did an ICO in 2017. Who knew what an ICO was in March 2017? Okay, yeah, that was really...
Early 17.
Huh?
January 17.
January 2017. Okay, yeah. So some people are really, because they had Ethereum doing their first ICO over here. So how did you do? How much money did you raise at that time?
We raised about 8 million.
Yeah. 8 million.
Yeah, 7.6.
So that was huge.
It was huge. Actually, it was the whole market cap those days was about $15 to $20 billion.
Yeah, and it was a fund. And what did you do for your investors?
It was just a company, but the model we were utilizing is the model of a closed-end fund. So the model was quite simple. We have been thinking on that this idea for a year before we were choosing the particular, okay, when we should make the announcement. Is it in January? Because in January going to be just only 2 ICOs.
No, but what is your return on investment? Come on, how did you do?
Return on investments, like last quarter we did 336%, and we overperformed Bitcoin 200%, and the general alpha is about 136%, if I'm not mistaken.
Yeah, and where did your fund invest in? Where did you basically put your money in?
We have actually the hybrid model of management. We have active portfolio management that we are choosing among 70 fundamental coins that we are reviewing every 3 months or every month. It depends on the market. And we are actually investing in the early stage in utility tokens, but we don't touch any fiat currencies, we don't touch any securities. And
So what he actually did, I mean, I think it went from 80 cents to $6 or $7, so the coin is more valuable.
Yep.
And you did dividends, you paid out dividends.
yeah, we had payouts in
Crazy idea.
on
Crazy idea. Okay.
Ethereum. We are performing quarterly with this fund and paying out 50% of the capital gain we had of the liquid assets, of the assets that has the price discovery and it is possible to trade.
Okay.
Yeah, and the other 25%.
So you did a good
was
job,
going-
and we'll talk about what you're going to do next.
Good.
The third partner is the first person of my Joe DiPasquale of BitBull Capital, with the coolest name. And Joe, you're a fund of fund, right? You're
Yes,
really,
that's right.
yeah. And the nice thing about you is that you've analyzed 200 funds, which are basically crypto funds, which are available. So first, I mean, tell me about your fund. What is it's called? It's a great name, BitBull Capital. And how much money did you raise, and what is your return? What was your return on investment, for example, in December last year? Microphone.
Sure. So, so we're closing in on about 20 million under management. But what we do is, as you said, we don't invest directly in crypto.
No.
We invest in different strategies and managers within crypto. So that's what BitBull
And you
Capital
told me
does.
in December what was your return?
Well, I guess what I can talk about the funds, because we can't talk directly about returns, I can tell you that certainly we see funds that in an up month are double what you would see from, let's say, just Bitcoin.
The general
certainly,
market.
Bitcoin did 1,400% last year. We certainly see funds that do 3,000, 4,000% last year, and even we see funds that are often up even this
and
year.
you did really well, much better than you invested in the right picks. Okay, let's start with you. Describe the market. There are now hundreds of these funds. Describe them. What are the different funds and which you've analyzed? Can you give us an overview of the market?
Yeah, I guess to answer that question, maybe I'll talk about why a fund of funds. I've met so many people here during this conference that have been in crypto since 2012, 2013, when I got in, and Vincent, you were in even earlier than me. I wanted a fund of funds for my own capital last year. I started pooling my money and friends and family and colleagues because last year there was 20 different crypto hedge funds. This is early 2017. So I started diligencing them. Both their strategies, you mentioned, like there's ICO strategy, there's also quantitative strategy, which might be market neutral. So I wanted a mix of different managers and strategies, and also to do deep diligence on these 200 hedge funds, including security diligence. And I personally, we're sitting here on the hedge funds panel. I think I personally believe in an active management style in crypto, especially with these recent sideways markets.
Yeah,
So
HODL isn't really the most fantastic strategy nowadays, is it?
Yeah,
Unfortunately, we have HODL funds. Yeah, so many.
HODL funds, yeah.
Right,
Who would
so
invest
many.
in a HODL funds? Yeah, just look. Very low management fee.
Yeah, HODL works fine if you start early enough.
Yeah,
Right.
Yeah, time heal all wounds. Times heal all wounds. Yeah. Okay, so now there's now 200. There's now 200. Do you have any idea what's under management now? What's the total amount?
Yeah, it's about $4 billion under management. So of the $300+ billion market cap, about $4 billion is actively managed. So that's why.
So it's teeny peeny nothing. I mean, if you have any serious funds nowadays, I mean, they manage much more than the whole crypto fund business.
Yeah, that's why, exactly. So there's, you can throw in hedge funds in, let's say, the equities market. Often hedge funds don't perform better than an index, but certainly we've seen historically that in crypto hedge funds perform much better than an index.
Yeah, no, but I mean, I'm saying the size. The size,
it's $4 billion.
The size of the funds is, I mean, the market, the crypto market now, 400, between 300 and 400, it depends on which day you look.
Yes.
So,
and that's why you can throw a dart and do even a simple active management strategy like arbitrage, and you'll make a consistent return that doesn't even have a take on whether the market's up or down.
okay. what I hope that the funds would do is would allow me to take euros and dollars and just my mother's money and just to invest it in a simple way. How many of those funds accept fiat currency and how many do accept only Ether?
All except fiat. You'll see some are, some have what we'd call offshore fund, like Malta, Cayman, British Virgin Islands. So some are, depends on where they're based, but all would accept fiat, except for some tokenized funds, which might be Ethereum or Ethereum investment. So for our fund, we accept either, but you do have to be an accredited investor. Usually our investors are usually high net worth individuals or family offices. For this, there are tokenized funds where you can perhaps not be an accredited investor.
Gupta, what do you think? How do you see these funds develop? Because the amount of money is so small, it needs to go up a factor of 10, a factor of 100, just like the whole crypto world will go up. How do you see that developing?
Well, I mean, at the end of the day, the question is, where are these funds making the money?
Yeah.
Right? Two options: economic fundamentals or enormous herds of people who have no idea what's happening. Right? How much of the money in the crypto space is economic fundamentals, and how much of it is people who have no idea what's going on?
Can you answer that question? That's
raise your hand if you know what the cap theorem is. Right? Cap theorem?
She's very proud raising her hand. That's really
proud
great.
for a reason, right? The cap theorem is why the blockchain exists at all. Right? 1% of the people in the room have heard of it. This tells me that you're all in dreadful danger if you have money in these markets because you have no idea what's happening.
Okay, make us enlighten people. What is it?
Okay, so the cap theorem is the fundamental problem that Bitcoin solves, right? You can't have a distributed database which has all the attributes you want in terms of scalability, performance, availability, network partition resistance. And it's the reason you can't have all the computers in the world synchronized. You can't have them synchronized because the speed of light delay between Australia and Britain is 1/7 of a second. And in 1/7 of a second, Visa can do 5,000 trades. So you can't get all the computers to agree about who owns the assets at any given instant because the speed of light prevents that.
That's why all these fast connections and all these
all high frequency trading, all the rest of that stuff, they're all managing the physical constraint of the speed of light. High frequency trading, Google Spanner, blockchain, GPS, these are the 4 systems that we use for dealing with the speed of light. The blockchain inevitably wins because there's no other known mechanism of synchronizing the global computers in a way that doesn't favor one nation state or one corporation. So we know the blockchain wins, but most of the people in the space have no idea what it is or why it works. And as a result, they're all directly in the firing line because they've got no way of assessing new technology or even new business models. And this scares the crap out of me.
Okay, yeah, and I can imagine. And you think that because of blockchain doesn't have that problem of all these who basically is the winner of the timely transaction? Is that the major advantage of why the single databases will be taken over by blockchain solutions?
Well, okay, so right now the blockchain is roughly where the internet was in 1990. We haven't invented the hyperlink, we haven't invented the web browser, we've got none of that stuff, right? The long-term equilibrium for the world has to be a single global integrated trade network where anybody can execute a contract for goods or services with anybody else in the world, and computers handle all the red tape and all the messing around. And that's partly an AI problem, it's partly a clearing problem, it's partly a settlement problem, but most of all it's a synchronization problem because you can't have somebody sell the same goods twice. And blockchain is the only fair system for doing that.
That's true.
Right?
But I mean, okay, you can see where Gupta has his knowledge and how he's building the next platform, but we're talking about funds here, okay? We want to basically take a bunch of money from people who do not necessarily need to know a lot. That's really also why the funds are in existence. And we want to have a good return on investment. How will that fund market develop yourself? I mean, apart from where you looked. So
if you talk to guys that run mining funds, they turn out to know a lot about mining. Right? Most of the people running blockchain funds don't know anything about actually blockchains. They don't know the technology at all. In the long run, the impact of the blockchain on funds as a whole, not just crypto funds, but all funds, is going to be the ability to take things which are not currently assets and turn them into assets. So one of the Materium's customers, the company that I run these days, is Vimarna, right? They're up there. And they want to basically turn flight paths for taxis which are flying taxi flight paths into transferable property.
Which is hot in Dubai, right?
In Dubai, right? You just
so
go.
that is, you're saying that's becoming an asset class which is nothing at the moment, and it
Right.
will be tokenized,
And
then it will be important.
tradable,
Yeah.
and this is created by contract. So you can imagine
Yeah.
hedge funds which take some kind of property, they write the contracts to make that into an investable asset class. So the property is created by contract rather than by fiat, and then they can literally spend new asset classes into existence with a combination of technology and legal work.
Yeah, but Gupta, I'm trying, that is really an interesting application. Tokenized.
sure.
What you're really saying, because we had a little preview communication, is that funds need to be much wider diversified because the whole crypto market goes up and down, in one wave. At the moment they're not diversified.
Yeah,
And
absolutely.
you say they need to be having much more asset classes before they really work, as a stabilizing force.
How much correlated risk is there in the crypto markets, right? If Bitcoin drops by a factor of 90%, everything else is going to drop by more or less 90%. You might see some kind of backlash where Ethereum went up by 2, but overall things are still
Joe,
basically
you don't
slipped
agree
Bitcoin.
because you saw that there's a lot of performance possibility, even if the market goes up or down. Tell me, how do these funds help to stabilize the market for me as an investor?
Sure. Well, I think a few things. One is last week, for example, we saw most cryptos go down. We saw some like EOS go up. So I think there are some that are uncorrelated, and that's one thing that funds do is take the bets on the crypto assets that they believe are going to appreciate even in down months.
Anti-correlation is your friend, if you can find it.
That's
Yeah.
for sure.
How do you do that, Ruslan? I mean, you're now going to go for your second fund, right? I mean, you made a nice performance, and everybody's ready to invest. What are you going to do for your next fund, and how are you going to make it more distributed?
Yeah, when we are talking about diversifying the risk and diversifying the currencies or portfolio, we haven't been talking about the security tokens, right? Or tokenized securities, tokenized equities, and other assets.
He's talking about airways.
Yeah, so other assets that must be taken into consideration. That's why we were doing and when we are talking about the crypto funds, ideologically, the crypto fund was at the beginning that the fund doesn't deal with the fiat currency, right? That the fund that manages within the cryptocurrencies. But it's really difficult because you have lack of hedging instruments, lack of trading instruments, and so on and so forth. That's why we were doing the next fund, TaaS Capital Fund, that is dedicated to, that can accept the fiat currency, that will be diversifying the portfolio within this, the top 70 coins, managing actively the portfolio aggressively, and investing in tokenized equities, tokenized securities that are related to blockchain projects, and as well LSH
Don't you have that
contributions.
problem that everything goes up and down? Like Gupta say, it's all one big wave at the moment. There's no security in that.
I don't see the security in that, but the management of the fund, the task is, if the market is going up, is to going up faster than the market. When the market is going down, you cannot do anything or you can do something, but your target is fall down, but not so rapidly as the market goes down.
Okay.
If I can just.
Are you really serious that we have 5 minutes left?
No, way less.
We just started.
Way less. We just started. We just started the conversation. Okay,
Vincent,
I have a couple of
quick
things.
point on that.
Yeah.
So I think it's important, you have a token fund and also launching an equities fund. So as an investor, first of all, you need to decide what portion of your portfolio you'll even put towards any crypto assets investing. But then within that, you need to look at whether you're investing in a hedge fund, which would be a token where you can actually have positive performance in down months. And we've certainly seen that from many funds, positive performance this year.
I want to have 2 more questions.
And then, but if you're doing an equity investment, you need to make a decision as an investor of whether you think the markets will go down over the next few years. And if so, you should really critically look at it. I think equity investments, but if you think it'll be up and you're a long-term investor and you're
It's not obligatory long-term investment. It can be like mid and long-term investment, but like not more than 1 year. It is a tokenized equity, tokenized security. It is much more liquid than the actual equity or actual security.
But I mean, the kicker here is that eventually somebody is going to want to KYC all of the money on the blockchain, and they're going to flag the money that doesn't pass KYC as dirty, and it will be illegal to use that money.
Yeah, definitely.
Right? That sort of process makes
gentlemen,
it really hard to know what tokens
the
are
chairman
worth.
is really making my life difficult. I have 2 more things to ask. How much do you charge for your services? So how much do you get paid for to manage the fund?
Well, we're 1% management and 10% performance, but we have a hurdle of 10%.
What is the
So if we don't
normal? What
give
is the
you-
normal fund fee? How much do funds normally ask for that? You ask
Normally
you
2
ask
and
10%
20.
above the 10%, yeah.
Yeah, 2 and 20, but we find that if you come in with more money, you get it for often
2 and
lower.
20.
Yeah.
And is that also the model you're using?
Yeah, we are actually, with the TaaS Capital Fund, we are using the typical model 220, but we wanted to find the balance between the blockchain market and the traditional market and institutional investors, accredited investors. That's why we have 2 share classes in the fund, distribution class and accumulating class. And the accumulating class is with a high watermark that none actually of the hedge funds is doing.
Okay. Okay. Wonderful. 220.
Can I mention something about that?
No,
Okay.
because because we don't have
Great
time.
point.
Because
Okay.
that's my fault. I want to say, hey, will the development of all these funds, will that lead that lots more normal money, gets into this space? Will that basically accelerate it at a great, at a very rapid rate? Will traditional money flow in because of funds? What do you think?
Not normal money, but institutional money, yes,
Institutional
because
money,
it's
but
risk-adjusted
investment money.
returns, so it's more steady. There's a higher Sharpe ratio. Which
Will
means
it be
less
tens
volatility.
of billions this year and
No.
next year?
There's I think this year no, not this year, 2019.
Gupta?
Do you want to go first? I'm still thinking.
Yeah, my opinion that institutional investors are waiting for some clear rules to play and for the custodian to be in place. Because nobody wants to appoint one or another person to be responsible for the funds, for the private keys. And we are living in the amazing days when all this market was starting due to retail and is going to institutional ones.
Yeah. Okay. Gupta, last words.
Okay, so there's only 2 reasons crypto is worth anything. The first is it's a hedge against dollar volatility or things like civil war breaking out in America. It's a very effective hedge. The second reason is that the internet is basically currently only doing business-to-consumer trade, and business-to-business trade is still basically emailing PDF files. So if we could get crypto to crack the supply chain, that's $45 trillion a year of transactions, whereas B2C e-commerce is about $1 trillion a year of transactions. So if crypto works, and we can finally get the internet to run the global supply chains rather than it all being done essentially manually, then it will be 20 times the size of e-commerce, and these valuations are credible.
And that's the case for the whole crypto economy anyway.
The whole crypto economy.
Okay.
But if unless we get over that hurdle, we're in an enormous bubble which will make pets.com look like the Albanian Ponzi schemes.
Gupta, Joe, and Ruslan, thank you very much. We just touched the surface. Good luck.